Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Tuesday. We have JOLTS today, and I believe we have a Treasury refunding announcement. We had that yesterday, but I think that there's another one. Is that at the well? I don't have anything on my calendar. Hold on a second. But before I get into the charts, I need to figure that out. Well, I don't have anything on my calendar here later on. There's Alphabet earnings today. Has that listed? Check if Forex Factory has it. No. I know there's something on Wednesday too, but good day to you, sir. Thank you, Wak. A little more elaborate of a greeting today, huh? By the way, good morning, Chewy, Tactical, Tenacity, and Dom Dom. Here every day. Well, I don't know if there's anything more on this today, but let's go over to the charts and I'll show you what happened. So yesterday there was a Treasury refunding announcement, and when that happened, the Treasuries jumped really hard, and now in the overnight, further upside. And we should just note that, you know, last time around, that was kind of when this thing started. So that could result in further upside trend. And we are getting like this mean reversion movement back up right there where it was kind of like, it could come in like this, could be like short signals, but it's also mean reversion signals, and mean reversion is winning out so far. S&P 500 really jumped on that, and I mean really jumped on that. Oil, on the other hand, coming down yesterday. The Middle East kind of cooling down, although my understanding is that there will be strikes against Iranian assets of some sort over the coming days. After Biden authorizes it, it won't like happen immediately, so that's kind of like a risk that it sounds like could be out there for the next like 2 weeks, right? Gold and silver are still up, so I think that geopolitical risk is still kind of there. Copper still middling. I haven't heard anything too big out of China, but I mean, things are happening over there, right? And the dollar, well, the dollar fell on that news yesterday, but not that bad. Wasn't that bad. We're still like right at 103.22, so. And Bitcoin also jumped, and it does look like perhaps the selling pressure in Bitcoin is gone, or is abating, and it is now just turning over to buying. So perhaps the path is clear now for Bitcoin to continue rallying the rest of the year. I guess we'll see. So yes, we get jobs numbers this week. So the big one is going to be ADP today, right? Let me double check to make sure that I don't got. Yeah, see, I don't have these numbers on here correct because it wants me on Eastern time and I am on Mountain time. Okay, there, that's correct. So we do have at 8 o'clock JOLTS. Yep, JOLTS today, ADP tomorrow. And tomorrow there is something about the refunding announcement where they say what maturities they're going to offer the debt in. And I think that there is something today as well, but I don't know what it's about. If the government decides to fund its deficit with more treasury bills at debt of less than 1 year, the yield on the shorter end could move higher or stay elevated. The government will release this data in its quarterly refunding report on Wednesday at 8:30 a.m. Eastern Time. Okay, so that one is on Wednesday at the bottom of the hour, like at the beginning of the session for us. Is there not something on Tuesday? Well, there's an article on Barron's, but it is behind a paywall. And there was just the bottom of the hour, and they're not seeing like any huge movement, so. Well, I am concerned that I'm going to have another really tight session. I don't know, man. This is like really quickly turned into something that is not very tradable for me because during normal action, it's not going anywhere. And then when there is stuff, it's so violent that I can't trade it. Maybe it will be better after this week, but. Republicans want to put a tax cut bill on the floor tomorrow. That's interesting. Everything really is all culminating and on this week. Well, let's see. What do we got on Zero? So the pinned story on Zero Hedges. Is there a Taylor Swift psyop? I you know what? I've been reading a lot of stories about this. Not that I'm saying that I'm not saying there is a psyop. Like, look, not that I ever plan on meeting Taylor Swift, but if Taylor Swift was here and she'd be like, Seth, why were you promulgating this rumor that, you know, my career and my relationship is a government psyop? I would have a hard time explaining that to her. So I'm not going to say that it's a psyop. Okay. But it is kind of an interesting theory, don't you think? It is kind of, yeah, here, let's do a poll. You tell me, what do you guys think? Is Taylor Swift a psyop? Question mark. Our poll. We'll see. We'll see what you guys think. I'll tell you what, you can, you vote, and then whatever it is you guys choose, I'll try and argue why you're wrong. Okay? I just. Good morning, Alan. How you doing? Fed's independence was nice while it lasted. A less independent Fed and a spendthrift government is structurally inflationary. This means the end of nominal Fed put. Okay. This is from Simon White. He's not a crazy guy. Shall we read this? Born in the 90s and tested to destruction during the Great Financial Crisis, modern-day central bank independence is effectively over in all but name. Persistently large government deficits, central banks with trillions of dollars of sovereign debt, and the political toxicity of elevated inflation make it impossible any longer for the Federal Reserve, ECB, et al. To set monetary policy fully independent from their government overseers. Look no further than Wednesday to see monetary independence's erosion and fiscal dominance's reascendancy play out in microcosm. Oh my gosh, there's a lot of big words in there, but I love his linguistic flair there. Look no further than Wednesday to see monetary independence's erosion and fiscal dominance's reascendancy play out in microcosm. A rate-setting meeting would normally be top billing for the market, but the Fed is likely to be overshadowed by the Treasury's refunding and auction size announcement on the same day. The wind is changing. The market's implications are far-reaching. Secularly higher inflation, the end of the nominal Fed put, a structurally weaker dollar, and the reversal of the relentless underperformance of real assets versus stocks and bonds are all themes poised to play out in the coming months and years. Central bank's independence is being challenged for two linked main reasons: high inflation and large fiscal deficits. Governments, since their dalliance with modern monetary theory in the late 2010s, have massively expanded their spending. The pandemic justified a warlike response in sovereign outlays, but large deficits have continued long after the emergency ended. Okay, so I don't really think that they were necessarily flirting with modern monetary theory, but the governments have, or the politicians have decided that massive spending is good for them. And it's very, very much true that while we needed to have a lot of spending during the pandemic to prevent the economy from just going into a complete tailspin, the large deficits have continued long after the emergency ended, and we are still running a deficit for who knows why. Biden is just spending the money and giving it to government workers. This is not just a U.S. phenomenon. Across much of the developed market, budget deficits have never been as high, while unemployment has been as low. As the chart above shows, the divergence began around 2016 and then rose as modern monetary theory light policies came into vogue before being turbocharged by the pandemic. We are in an era of large, highly pro-cyclical government spending. That is existential for central bank independence. Their political independence is under creeping threat from populist politicians, but it is their operational independence that is already fatally circumcised. There are three key reasons why. The swelling amount of Treasury debt outstanding, driving a rapidly swelling rising interest bill, the large size of the Treasury's account at the Fed, and the high proportion of shorter-term debt, i.e. bills. Did I call it a psychops? No, it's a psyop. It's a psyop. It means whatever you want it to mean. It means that you think that her relationship is fake, or that the government is using her to try and stem misinformation, and that she's some sort of a NATO asset. I've seen all sorts of crazy theories, and I'm not subscribing to any of them. I'm just asking if you think Taylor Swift is a psyop. Okay, let us continue reading. First, we need to quantify central bank independence. Governments are inherently inflationary, as large, voter-pleasing fiscal deficits typically lead to a structural rise in inflation. Thus, the policy of an inflation-targeting independent central bank should be counter to fiscal policy overall through the cycle. The modern monetary independence indicator for the U.S., shown below, is a correlation between the change in government borrowing and the change in the Fed's shadow rate, so as to include the effects of quantitative easing. As we can see, the golden age of Fed independence was the late 1990s to the mid-2010s, when monetary policy acted contrary to its fiscal counterpart. Monetary and fiscal policy working oppositely. I don't know about that. That chart seems awfully skeptical. You're like, oh, okay, but now we're just back to the way that it was in the 2000s? Okay, whatever. Since then, modern monetary independence has been slowly eroded and will be further compromised by the government's bulging interest bill. Interest must be paid for either with more borrowing or higher taxes. Both of these are bad for liquidity by draining reserves out of the system or by reducing their velocity. The central bank ultimately must accommodate this by easing policy. Overlaying U.S. interest expense on the MII shows that when the interest bill is high, it leads to a rise in the latter, signifying the Fed is acting less independently and vice versa. Today's rise in interest costs shows the Fed's independence will be increasingly constrained. Interest must be paid either with more borrowing or higher taxes. Well, both of these are bad for liquidity by draining reserves out of the system or by reducing their velocity. Okay, but the government stimulus and all of the government spending increases liquidity and puts more reserves into the system. So what he's saying there is not the full story. The Treasury's account at the Fed further inflames the outlook. Since the great financial crisis and a modern monetary theory and a monetary system of super abundant reserves created by trillions of dollars of QE, the Treasury has used its Fed account more, but it was not until the pandemic that its size grew to over $1.7 trillion. At $830 billion, it's now lower, and the Treasury aims to keep it around $750 billion, but that's still a huge lake of liquidity, and the Treasury either significantly adding to it, i.e. taking reserves out of the system and reducing liquidity, or drawing it down, boosting liquidity, has a consequential market impact. The effect is not merely theoretical. The period of poor S&P 500 returns in the 2022 bear market were accompanied by a worsening trend in reserves, driven by, among other things, high and generally rising TGA. That's the Treasury's account at the Fed. The Fed cannot indefinitely overlook this assault on liquidity, as when assets fall, there is a greater risk of recession-inducing feedback loop between the markets and the economy. The TGA is a direct impediment to the Fed's operational freedom. The Fed's room for maneuverability is further limited by the rapid rise in bill issuance and thus the drop in the average maturity of the Treasury's outstanding debt. The Yellen pivot, when the Treasury massively increased bills issuance to fund its deficit, allowed money market funds to lend to the Treasury using inert liquidity parked at the Fed's reverse repo facility. That supported markets in the face of crowding out effects of large government issuance, but it also means that bills are now over 20% of the Treasury debt outstanding. When the average maturity of government debt is very low and the central bank raises rates, it creates a fiscal squeeze as the government's funding costs rise almost immediately. The central bank thus has to re-loosen policy to offset the unintended fiscal tightening. Okay, so they're saying that having more of the stuff issued in bills essentially makes the liquidity and bills out there more sensitive to a change in interest rates. And thus, it's harder for them to raise rates. A less independent Fed and a spendthrift government is structurally inflationary. This means the end of the nominal Fed put, a backstop for financial assets, i.e. stocks and bonds, as elevated inflation eats away at real values. Elevated inflation will thus make real assets, such as commodities, increasingly attractive, reversing their decades of extreme underperformance. That's good for us. That's good for us. That means that we can make money being commodities trading advisors. Huh? That's good. I mean, it's maybe not necessarily good for the economy, but it's good for us. It means we could become millionaires. All right. Anyways, high inflation and a compromised Fed is also a recipe for a structurally weaker dollar. Well, I'll believe it when I see it because the dollar continues to be really strong. As the Fed's balance sheet, on which the dollar is a liability, is further vitiated by assets of poorer quality, including the bonds of an increasingly indebted U.S. government. There's an irony to all of this. Central banks might argue that losing their independence will make inflation even worse, but perhaps the only reason they won it in the first place was the world was in an era of structurally weaker inflation driven mainly by demographics and globalization. Either way, inflation will be much harder to tame now as these themes reverse and the era of autonomous central banks de facto draws to a close. Okay. So there was a lot in that article. There was some things that seemed correct to me. There were a couple of things that I kind of felt like were not the full story. If we see inflation, the Fed will raise rates and it'll be really bad for the market. But they're not necessarily saying that. But Simon White, that's his name, right? Yep, Simon White, Bloomberg macro strategist, is not a schlub. So that is probably something I'll read again later, because that I think is likely to be a major theme for years. This is kind of what they're saying there. Okay, what are you saying? I heard some other celebrity chick make a pretty cognate argument for why their relationship is fake and or a marketing gimmick. Who was this other celebrity? PayPal, PSYOP, psychological operations. I don't know if it was already answered first, but last, but okay. She told her own story about her publicist and an NFL player's publicist setting up a date for them, scheduling the paparazzi to photograph it and stuff. I wouldn't say staging celebrity relationships is any kind of news conspiracy theory or psychological operation. On the contrary, I think it's pretty standard. I would 100% agree with you. Or let me say more broadly, it is not uncommon for celebrities to use their relationships for publicity purposes, and it has happened in the past where celebrities have faked relationships for publicity's sake. In fact, it has happened with Taylor Swift before, or like there was one relationship where Taylor Swift, where this guy was like, "Oh, you were only doing it for the publicity," and she was like, "No, because you were like a no name, and I'm the big, and you're piggybacking off of me." I don't remember which celebrity that was, but that was something that did happen in the past. So you're right. This whole thing that's like Taylor Swift, because if you go and you read the Zero Hedge story about is Taylor Swift a psyop, there's all these tweets about like there was guys giving speeches to NATO and like other intelligence people speculating about, we should do a Taylor Swift psyop. Like they've literally talked about it in public, that like, well, if we want to try and control the narrative and suppress incorrect information, what we need is a really big celebrity that has more kind of influence to push people away from the incorrect information. And ergo, Taylor Swift is probably our best chance. They've like outright said that sort of stuff. I heard that using her as a psyop. I don't know if that's what this is though. Yeah. That. Oh yeah, there was the whole thing on Twitter of AI images of her. People were getting upset over that. But I think that the idea that NATO would pay a singer is a little silly, especially since if you're subscribing to that theory, then you're also subscribing to the theory that intelligence agencies are actively working hard to keep Joe Biden in office and all of this sort of thing. Okay, which I'm not gonna put it past them, but like that's a pretty big lift. Like that's quite a large number of crazy things that you would have to do and try and take out. And then there's this bigger thing, which is like, okay, so like, did they rig the NFL? Well, the Chiefs were in the Super Bowl last year, weren't they? I don't follow football anymore. They were in the Super Bowl last year, weren't they? But you know what else? Somebody pointed out to me on Reddit, which I thought was, they just kind of brought it out of the blue, but I thought it was interesting. Taylor Swift has never done a Super Bowl halftime show. See, Taylor Swift has a long-term deal with Coca-Cola. And up until 2022, the Super Bowl halftime show was sponsored by Pepsi. So Taylor Swift couldn't do the Super Bowl. I suppose she could do it now. Maybe she'll do the halftime show next year. Actually, I'm going to have to watch it because apparently Tiesto is going to be DJing. So that's interesting, I guess. But then it begs the question, is it an intelligence op or just some random event that can be used as an intelligence op? Okay. But I'm kind of more of like, okay, it seems ridiculous to me to like everything that would be involved in the government trying to as a psyop, right? But as you were kind of saying, Uzi, I think it's entirely plausible that they say like, hey, start a relationship with our star quarterback and it will really help the NFL out and it will give you a lot of publicity and yada, yada, yada. Like they could totally fake it, right? I don't think that that's implausible. I don't think it's true, but it seems plausible to me. You think it's most certainly a cross-marketing operation, but like think of it this way, right? It's kind of weird when you start thinking of it this way. Okay, well, just won't warn you. Okay, Taylor Swift is the alpha female. She is. I mean, you can say whatever you want about like what is an alpha female like in all of these. She is the most successful woman in America. Okay. The most successful woman in America doesn't date some beta shit, right? She doesn't. She wouldn't date me. Heck no. Okay, some ADHD super nerd. It doesn't happen. Doesn't happen. You're the alpha female. You're gonna be with the alpha male. It's just like in high school, guys, right? It's like the most popular pretty girl. Who does she date? The quarterback, the captain of the football team. Of course. So, she's dating the winning quarterback right now. Doesn't that make sense? It makes too much sense to me. You know what I mean? Like, because you can just kind of see it all like when this started at the beginning of the football season, we were all kind of saying that this could kind of happen. That like, oh, she's going to take it all the way to the Super Bowl because that's what the NFL needs for the maximum publicity, right? And then Travis Kelce wins, and then he proposes to her at the end of the football game. Could there be a more American fairy tale story than that? And isn't that like Taylor Swift's like whole freaking thing? You know? Isn't he the quarterback? He's the quarterback, right? Are you saying Travis Kelce is not the quarterback? What are you saying here? He's the tight end. What? I thought he was the quarterback. Oh my gosh. That's so funny. Oh my gosh. Okay, you guys are right. He's the tight end. Okay, wait. I'm not 100% sure what the tight end does. Isn't the tight end run the ball? Right? Why did I think he was the quarterback? No football, yeah. Well, I haven't, like, honestly, I really haven't paid attention to the Kaepernick thing. It was like, hey, we could, like, talk about this around the water cooler. Or do we just go with the Denver Broncos? They seem to be doing pretty good right now. So I was, like, into it for that 1 year when the Broncos were, like, you went to the Super Bowl, right? Well, not 1 year, but it was like they went and then they didn't for a few years, and then they came back, and that's when I was watching it. And then the Kaepernick thing happened, and I was like, you know what? Screw pro sports. Why did I think he was the quarterback? He's the tight end. Okay, so who is the quarterback? Patrick Mahomes. Oh, he's an interesting looking guy. I dig the hair, actually. I dig it. That when I look at that picture right there of him with this one, I'm kind of like, okay. That looks like a freaking kid. Probably is a kid. I do know there's that big conspiracy that NFL outcomes are planned. I'm not a sports guy, but I'd imagine with sports betting being such a massive pool of cash, there'd be at least a nugget of truth in there. 100%. Listen, when I was a kid, okay, there was only one thing in Utah, and that's basketball. And we had the Utah Jazz, and the Utah Jazz, when I was a kid, was always a good team. There was never a time that I had not known Karl Malone and John Stockton. They were the freaking gods of basketball, and it was like Utah's entire culture, okay, for a decade or two there, okay? And every year, we'd get so close and miss it. Like there was that one year when we were beaten by the Rockets. Oh, I always hated the Rockets. And it was always dirty too. It was always like we just barely lost, and it was always dirty, and there was like questions about the refs. So the people would always say, yeah, see, we're a small market team. The NBA doesn't really want us to make it to the NBA finals. Except for that when we did make it to the NBA finals, those were some of the most watched NBA finals ever. It's also the loudest, of course. It's the loudest. So, final game. It's like everything's tight. It's down to the wire. One of the tightest moments in basketball history, right? They pass in the ball. Michael Jordan has the ball. And he literally takes his hand on Brian Russell's hip and pushes him like 3 yards away. Like, it's this huge shove. It's like, pushes him away, takes the jump shot, makes it. Bulls win the NBA Finals. Okay? That was when I knew basketball was rigged. 100%, that was without question a foul, and they did not call it because that would have ruined the game-winning shot for Michael Jordan, their most popular player. There was no way they were going to call that one, and that's when I knew. From that moment on, it wasn't the same because we'd always look at it and we'd be like, hey, kind of seems like now that we're doing well, the refs start coming out with all the calls and yada, yada, yada. Yeah. And then, yeah, see, here's Jiwi. And then you're like, you're just butthurt because you lost. Yada, yeah. That's what everybody always said. Okay. And then decades later, that very ref that made those calls was basically called out for betting on games and rigging the outcome of games. That ref that we in Utah hated the most was the guy that basically got hit for rigging the games. And there's go watch it on Netflix. I forget what it's called, but there's a documentary about this on Netflix where they interview a ton of things and they straight up say, oh yeah, the league would say, we want this team and we want this team, and the refs would kind of adjust their calls a little bit to kind of help get the outcomes that they wanted. Yes, to some extent, yes, the league and the referees kind of try and nudge the outcome of games in the direction that they want it to go. You shouldn't have had the finals in the first place. Malone did an offensive foul in the conference finals against the Rockets. Remember, depends on what year you're talking about. I don't remember that though. No. I do remember though that there was a number of controversial calls in the Western Conference Finals one of those 2 years. Yes, I do remember that on both sides. So I don't know. But yes, does it happen? We know for a fact that it happens. So it's not out of the question that the NFL maybe, it's their finger on the scale. I used to be a huge WWF kid into my teens back when wrestling wasn't popular enough, so people laughed at you for liking it, and they'd say, "Oh, it's fake, you dummy." And it was like, yeah, no crap, but at least they're honest about it. Okay, that was the one where Stockton won the game-winning 3, yes. I didn't get to watch that particular game live, so I don't know all of the details about it. I only got to hear like okay, I forget what we were doing, but we had some other obligation that night. We couldn't watch the game. And so like we finished our thing and we turned on the radio and literally heard the last play, which was quite fortuitous. But again, it's some of those things that like play out so perfectly that it's like that can't be random, you know? It can be random, but our brain doesn't want to think that it could be. That reminds me of this video I saw on Reddit where like a coyote is attacking a sheep and this guy has like a scope set up on his gun, and eventually the coyote moves into a position where the guy has a clean shot and he shoots the wolf and then the sheep runs away. And everybody in the comments were like, see, now this sheep thinks that he has like superhuman powers and everything because the sheep will think that he is the one that killed the wolf, right? Yeah. Dude, that was a pretty cool video, don't you think? I thought it was a cool video. I was like, wow, that makes me want to go buy one of those guns and do that sort of thing and record them. Except for that, I don't think that I want to put that much effort into it, but you have to excuse me. My I think that like when I was barbecuing, this is embarrassing. I think that when I was barbecuing on Sunday night that I like singed my eyelashes or something because they keep like sticking together. That's why I'm rubbing my eye a ton. It happens here in Europe too. For years, Barcelona was known as Ufalona. So yeah, so did you see the video though? Going back to the NFL, did you see the video where like, one guy makes the interception? He there's an interception or fumble of some sort, and the guy gets it, and then the ref like literally like runs into him and runs along with him for several steps and is like his hands are in the air. Like the ref literally causes the guy to fumble the ball. Oh my gosh. Like to me, it looks like the ref is intentionally interfering in the game. It does. It totally does. Now, I don't know if they could rig it enough to get the Chiefs to the Super Bowl. Okay. Like, they were kind of the best team in the NFL anyways. So like, okay, wait, where did you guys come down on? You're 50-50, 5 yes and 5 no? I gotta try. See, here's the problem, is that like now that we have ChatGPT and stuff, you could have a robot watch all of my streams, look at anything that I ever said and find me saying something bad, right? So like, let's say that I become a millionaire and I have a house over on the private ski resort up in the other side of Layton, and then Taylor Swift buys the house next door to me or something, right? And then she comes over for dinner one night, and she's like, "What's this about you speculating that me and my husband's relationship was fake?" Yada yada. You see, I don't want to be in that situation, guys. Don't want to be in that situation. But is it plausible that the relationship could be fake? It's plausible. We don't have any evidence to support that it is. But see, that brings us to the question that I always find interesting. You really think they would be married then? Here's my prediction. Chiefs win the Super Bowl. Kelsey proposes to Taylor Swift after the game in front of everybody. That would be like the ultimate, most crazy outcome of all of this. Right? It's not crazy, but like, you know, if this was going to be, if this just continues to become a bigger and bigger thing, because like, look, it's the pinned story on Zero Hedge. I don't think that Zero Hedge actually thinks it's a psyop. I think that they're just trying to take advantage of the clicks and the traffic, right? But for this to become like the biggest story it possibly can, Chiefs win the Super Bowl. Kelsey proposes to Swift after the game in front of everybody. That would get the most headlines. That would be like that would be like one of the key turning points in humanity's history, sort of a thing. Like it would be the biggest pop culture moment of like ever. Okay, if that happens, if Travis Kelce wins the Super Bowl and then proposes to Taylor Swift in front of everybody, name a bigger pop culture moment. Name a bigger pop culture moment. I don't think you can. You probably will, and I'll be like, "Oh yeah, actually, yeah." I don't think that you can. At least not a bigger positive. I can think of plenty negative pop culture moments, like when Michael Jackson held a baby off of a balcony by a leg. And then Britney Spears. But by the time you buy the mansion and she moves in, would she still be married? Yeah, I think so. I hope so. Like, here's the thing. I don't know anything about Taylor Swift. And one thing I do know is that these celebrity personas aren't really the real person to some extent, right? But she doesn't seem ruined to me, which is to say, I do not see the kind of comments from her that would like prevent somebody from ever getting into a stable relationship and actually having kids and being happy being married and stuff like that. It could happen. But the big caveat to that is that being a celebrity makes it really hard to make those things work, apparently. Oh my gosh, you know what that reminds me of? I don't know if you want to shift gears yet or not. But I was arguing with somebody on Reddit about something, and why would you want her to be married when she moves in? Wouldn't you want her to be... No! I'm already married, dude. Can you imagine... Listen, can you imagine me being... You're talking to a guy who hasn't listened to... at least has not willingly listened to a pop radio station in like 20 years. Okay? I only listen to techno podcasts, and it's been that way since I came home off my mission, since like 2003. So it's literally like 2 decades. Although for a long time I had to only listen to CDs, but I digress. I would drive her. She would be so annoyed with me. Listen, any woman is annoyed with me, but I think that Taylor in particular would be really annoyed with me. You are perfect. She doesn't want guys that like her. Oh, really? Is that what? That's funny. No, I'm not. I'm not saying. Listen, you're okay. You're jumping ahead here. I think that some of you guys forgot about what the real fantasy here is. Okay, so let me show you here. Okay, up here. This is Utah. This is the Wasatch Front. Okay, and these are the Eastern Mountains that we all live alongside. I live along, up the mountain a little bit. Okay, up here in Layton, and I think you'll see it. Yes, right here is something called Wasatch Peaks Ranch Ski Resorts. And basically what has happened is a bunch of unnamed billionaires have somehow acquired access to this huge plot of land here and have turned it into a ski resort. So it is a private ski resort that you have to be a member to ski. That pisses a lot of people off because when you go to ski anywhere, like I like to ski up in here. I like to ski up at, where is it? Snow Basin is where I go. So where I've gone in the past, at least. Haven't been in a few years. Haven't been in a few decades. Oh, Snow Basin. Here's Snow Basin. That's where I go. Okay. So here's Wasatch Peaks. Okay. They're always, the ski resorts are always packed. Everybody complains about it. They want to open up more spots. And there are some spots that they could probably open some more ski resorts for. Okay. These guys, they've locked it down. People are pissed about it, right? And they're going to build houses. It's like $100,000 just to become a member, right? And who knows what the yearly dues are, okay? It is a ski resort that is designed to only be for millionaires. So that's the dream. The dream is we start the hedge fund, we become a millionaire, and then we build a house at Wasatch Peaks Ski Resort. And then everybody can hate me for having a house there. That's the dream, okay? And so I'm just saying, I'm not that I have some fantasy that Taylor Swift is going to move next door to me, but if I own a house at Wasatch Peaks Ranch Ski Resort, there will be celebrities there. I'm just saying. They will probably not actually live there, and the houses will be empty most of the year. And I'll be there full time. That's why I want to live there and just be there full time, And hey, I could even start a home management business, and hire all of the people and run all of the households in this, I think it would be cool. That's the dream. Okay. So I'm just saying, I can't say anything too stupid that any of my potential future neighbors would dislike. That's all I'm saying. Any celebrity, and so if I'm speculating about any celebrity, I kind of have to be like, wow. But if I actually met them and they knew that I had said that, how would they feel about it? You know what I'm saying? And then the whole thing is okay, maybe none of that is going to happen. But if I wouldn't say it, if they were my neighbors, then should I really be saying it on the internet in front of a bunch of people? Probably not. You get what I'm saying? Okay. And yes, we could totally share recipes. I'll bring them over. We'll smoke some brisket. We'll have parties and stuff. But I do want to live up in the mountains. That would probably be the nicest place I could possibly live. But I'm kind of thinking I could move to Eden, maybe. I don't know what their internet is like, but if you find me fiber optic somewhere up here in the mountains, I'm going. Get away from the smog. It's less smog over in these these other valleys. Here's Park City over here. Park City area. I wouldn't want to live as far as like Oakley and Camas, so that's ugh. But like maybe Park City, you know, close to the freeway so we can get back to the city really easily. I guess the thing that would suck about Eden is you got to go into Ogden, and Ogden's not that great. But you know, it's like a point that if they get married, what are the chances that they get divorced? It's probably pretty high because like the public life of celebrities is just like it ruins families. So I was watching this video yesterday from I can't remember his name, but it was about Jesse Livermore, right? The famous trader. And he had read a few biographies about him and stuff, so he had really well sourced this video, and it was like an hour long too. Holy crap. But it was really good. But the thing that stuck with me about Jesse Livermore, because like we all lionize him and treat him as like, you know, the most successful trader ever or anything, but I would say that his life was an awful failure. Like he had all sorts of family problems. There was one incident where his wife shot his son when she was drunk, and eventually before Jesse died, his son killed himself. And then his son had already had a son, and his son's son killed himself. And then I think his son's son killed himself. His life was horrible. And when he killed himself, he had more liabilities than assets listed. So like that's the whole thing, is like we say, okay, does technical analysis work? Well, Jesse Livermore, he traded technical analysis and quote unquote price action. And he was a successful trader, so that must mean that it works. But was he actually a successful trader? Because I say, you go and you make millions of dollars, but then you die broke, you weren't a successful trader. You made money in the short term, but this is why I keep saying it's like, okay, like after you die, and then like 5 years after you're dead, we have a council and everybody votes and they write their answer on a piece of paper and you put it into a furnace, and then depending on what color the smoke is, then we canonize you as a profitable trader. Until then, don't call yourself a profitable trader because you're not dead yet, right? And what matters is how much do you have when you die is how we're going to determine how profitable of a trader you were, right? Yeah, he looked at the tape. So I think that you would call him the price action trader and not a chart trader. But still, it's still like what I would call technical analysis. So this gets into this interesting thing. Also, which is like, what is technical analysis? What actually is it? Because I think what it is technically in definition and what it actually is within the cultural zeitgeist are two kind of different things. Like I would say that the big problem that I have with technical analysis is that its entire premise and the conclusions that it makes are false. Because the take that they make in technical analysis is basically this. Markets are efficient, so all known information is baked into the price. But even though prices are efficient, trends still tend to exist because of market psychology, essentially. Because of the way that people are and market psychology and everything, trends tend to exist. And because the market is perfectly efficient, those are reflected in the charts, and then you can then take advantage of them. So that is basically the premise of technical analysis. And so I take issue with it because all of those things are false. Number one, the market is not efficient. That is not very efficient at all. And then number two, long trends, as far as we can tell, are not created by people's, bandwagoning effects and so forth. It appears that there are pretty solid reasons why trends happen just based on macroeconomics and the structure of the market, right? But there is one thing about technical analysis that is possibly true, and that is that many assets, particularly commodities, tend to exhibit trends. Okay. So, if we have a strategy that's a momentum strategy, and we're looking at a carefully crafted universe of highly uncorrelated instruments, okay, which is a lot of quant work and stuff, and that's like a really key part of the strategy here, right? And then you've got really good risk controls and stuff like that. But your trigger is basically some momentum signal. A new 50-day high, comparing a bunch of moving averages against each other, and yes, maybe even drawing some lines on a chart and seeing it coming up to support and resistance, okay? And those are your entries for a momentum strategy. Is momentum actually technical analysis? Well, it depends on your definition of technical analysis. Because if your definition of technical analysis is that the strategy incorporates the analysis of price. If your strategy incorporates the analysis of price, then it's technical analysis. Well, I think that's a terrible definition. I'll tell you why. I'll prove to you why it's a terrible definition. If I look at the price of the 10-year treasury, and then I look at the price of the Japanese yen, and I compare those two things against each other and then determine where to put my bid and offer based on that, I am doing an arbitrage strategy. But as part of that arbitrage strategy, I am looking and analyzing price and comparing the price of this thing to the price of this thing. So it is arbitrage technical analysis? That seems kind of silly, doesn't it? Is arbitrage technical analysis? Seems kind of silly. If I come in and I, analyze a company and all of the fundamentals, well, one of the inputs is the current price so that I can figure out what the PE ratio is and all of these other things, right? I'm doing a fundamental analysis, but because I'm incorporating current price, does that make it technical analysis? Seems kind of silly, doesn't it? Get what I'm saying? So it can't just be that it incorporates analyzing price. Now, maybe you could say the strategy is only analyzing the price. That if you're only analyzing the price of one asset, looking at the chart and trying to predict where that one asset is going to go, then I would argue that momentum is not technical analysis, because the construction of the universe of assets is probably like where as far as I can see, where the edge actually lies. And the risk and the way that they manage the risk, that's where the edge actually lies. So like using momentum as proof that technical analysis can work, I think kind of misses the mark. Because it doesn't check any of the boxes of like how retail traders actually use technical analysis, which is, I want to invest in Apple. Well, let's pull up a chart and see what the chart of Apple looks like. Well, based on my analysis of the price and what this chart looks like, I think that it's going to go up, and so then I buy it. Okay? And that's when I say that's technical analysis to me, and it's total BS. The idea that you can effectively, in any capacity, predict which direction a stock is going to go based on technical analysis is complete and utter hogwash. Jesse Livermore believed it. He did. But he died broke. Right? And as far as I can tell, he had some success, and then his methods stopped working, which is basically what always happens with technical analysis is if you find an inefficiency in the market and you make tons of money from it, then everybody else picks up and starts doing it, and it ceases to be an edge anymore. Especially if you're trading intraday. Saying something on Discord sums up your rant perfectly. Chiefs, 2 power couples celebrate on the field after a big win. It's got a picture of the quarterback kissing the ref. That's hilarious, dude. And the Taylor Swift is holding the guy. That's funny, dude. That funny right there. Treasuries are now starting to move up again after having a pretty good trend in the first part of this. You know, I'm maybe being a little bit too risk adverse by waiting until the JOLTS number to do anything. It seems to me like that because of the Treasury refunding announcement that the trend for the next few months is likely to continue to be up. Everything that I dislike is TA. There you go. Okay, William asked a real question. What are the best micro futures markets to scalp according to you? Well, I think that the best market to trade is the market where you actually have an edge. Right? If you're going to pick one instrument and just trade that one instrument, then you want to know everything about it. So now if you don't know anything about anything, then I think that the Treasury market is the best place to start. Because there is a lot of information that's public and readily available for you to understand what is driving the Treasury markets, at least more so than there are in other markets. And it's still going to be super, super hard. And, you know, we're at a huge disadvantage compared to professionals. But, you know, I think that the Treasury market, it being the largest and most important market, it becomes a little bit easier to find that sort of stuff. But, you know, if you worked in the oil industry, then I would trade oil. You worked at the copper mine here in Utah. You know, if I lived in Utah, I live in Utah. I didn't work at the copper mine, but that's one place that where commodities would be relevant around here. It's copper. You know, then I should probably be trading copper. You know, it's just I don't know anything about copper, so. Oh, you said earlier you were arguing with someone on Reddit. Well, so there was this thread, and the thread was basically here are the things that quote unquote pros say that don't actually help you. And one of them that they said was, you know, all of the pros, all of the really knowledgeable people say that technical analysis is nonsense. And they're all like, no, that's not true. It actually is very, very useful. And so this one guy was like, well, we know that technical analysis works because one time, why am I having a hard time with names all of a sudden? The Renaissance Capital guy. Starts with an S. It starts with an S, isn't it? Sounder. Simmons. Jim Simmons, that's right. Jim Simmons. Jim Simmons, one time in an interview, talked hypothetically about a moving average, right? So if you go and you watch that, because I know the interview he's talking about, but if you go and you watch that one, I think I'd have to go and find it, but I've definitely watched the video. I remember him talking about a moving average. He's basically talking about a momentum strategy. So they say, well, technical analysis can work, and we know that because of Jim Simmons used a moving average. And I'm kind of like, well, that's kind of beside the point, because it really makes more to the point that I'm trying to make here, which is that it's not anything even remotely similar to what retail traders actually do. when you actually understand the strategy and where the edge from that is coming from and everything, you realize that it's not really the way that retail traders practice technical analysis. And it's definitely not the way that retail traders practice technical analysis in day trading, right? Because the way that I would use this information for a day trader is to come in and look at this on a daily basis. So if I were to analyze this one, our situation right now, we had a very strong trend. This was a momentum play that you would want to have gotten on board with. And we came down to an area of mean reversion. We are now bouncing. So this is an okay place for, a swing trade to be long. Yeah. Except for that there's a lot of risks ahead of us, so I don't think that you actually do it. But that, and then you can come in and you can say, oh, well, because of the funding re-announcements and the momentum and all of that sort of stuff, I can probably buy it. Yeah, probably. And that's how I would utilize it, right? Or just switch over to just trading a momentum strategy. Get enough capital and do all of the work to create the portfolio and manage all of the various positions and stuff. So I have met retail traders claiming to do that. So the thing that I think is kind of funny about it is that, the people that do that, they're pretty humble about it because they know that it's it's not like, oh, I figured out the market and everything. It's like, yeah, I do this thing and it's kind of stupid, but it makes money in the market. And so whatever. Probably because they went through this whole journey that we're going through where you're trying to predict what's happening and you realize that you're not very good at it. I didn't hear a word of your explanation about what TA is. In my opinion, it's fundamentally looking for patterns based on past behavior, and that's it. Yeah, it would have to include more than that, though. It would have to include the type of data, right? So if I come in and I say the last time that we had a Federal Reserve meeting, it did this, and ergo we're going to have this happen again, is that really technical analysis per se? That's really more of a fundamental kind of theory. And then maybe you're doing some technical analysis then at that point to try and understand what had happened at those past catalysts. When I started out many years ago, technical analysis was everything that wasn't fundamental analysis. Yeah. But that's where it is. So if we're trying to predict orders, I might be able to use current options positioning, for instance, to make a prediction about which direction price is likely to go. And to say, if we cross this line, then I want to go long, right? So is that technical analysis? Maybe, kind of. Is it using patterns on past behavior? No, it's not. But it's not using... But then if you use the definition, it's everything that wasn't fundamental analysis. Well, it's not fundamental analysis. So I think that if there was a question about it on one of the tests that I'm taking, you would probably call it technical analysis. But is it really technical analysis? Is this practice? Not really. But that's where I think that the conclusion that I make on it is that the understood definition of things isn't really very helpful to you, right? Whether or not momentum is a technical analysis strategy is kind of irrelevant, because the reality is that momentum is a strategy that has a pretty well-studied and understood track record of profitability, and pretty much everything else in technical analysis doesn't. So momentum happening to be technical analysis kind of doesn't matter, because it's the things specific to momentum that would differentiate it from the rest of technical analysis that is actually making it profitable. You know what I mean? So whether it's technical analysis or not is irrelevant. I think we can all agree chart patterns are TA, sure. Yeah, the TA group keeps stealing all other things and calling it TA. Yes, because they've essentially wrapped their entire identity up in being technical analysis. In all fairness, we have kind of wrapped our identity to some extent in hating technical analysis, right? But I care more about being profitable on things. So, like, if I find something, I'll utilize it. It's just that I think that there are very key differences between momentum and the rest of technical analysis. That it's kind of silly to try and say, well, because momentum works, that must mean that there's something to technical analysis and you should learn it and so forth. No, I don't think so. Well, you were calling OnlyFans technical analysis? Is that what you're saying? I agree. I feel that TA is generally used, the meaning itself doesn't have a set solid meaning. So, like, to each person, they keep adding things to TA and calling it as such more and more. Yeah. Oh, order flow. Well, I would say that order flow is not really a form of analysis, though. That's the issue that I have with that one. Is I believe that order flow is a type of data, and you can perform technical analysis on order flow. Come on, it's listen. You go and you do a poll on the internet and you say, what does OF stand for? And I'm guarantee you 80% of them are going to come up with OnlyFans, okay? That doesn't mean that my mind is a gutter. It means I'm a normal person on the internet. Now, order flow is not TA, but the way that most people analyze order flow is with technical analysis, yes. I don't know. I don't know why you would use. That's why I thought it was kind of weird. But what a lot of people try and do with order flow is, especially the people using footprint charts, they're trying to apply technical analysis to order flow. Yes. But from everything that I've seen, the edges that you explicitly gain from order flow are like HFT in nature. So you can analyze the market and the order flow to understand the current situation, but it doesn't predict very well what's going to happen unless you have some sort of larger edge that tells you that orders are going to come in. Because you just, like, past market orders doesn't necessarily predict future market orders very well, unless there's a meta order going on. Because, oh boy, OnlyFans made it all right for a lot of people to show it all. Most of the key stars in history regret it all, so I can almost guarantee them regretting it. Yeah, probably. Well, the thing that bothers me about OnlyFans is that it became so quickly oh yeah, that's like an easy way to make money. When the reality is that like a few hundred girls made a ton of money from it, and then thousands of other girls exploited themselves on the internet and made jack squat, right? Really was exploitative. Imagine someone on the street asks you what's your trading style and you say I'm an OnlyFans. I've never seen anybody abbreviate order flow like that. Whatever. But anyways, so like I went through this whole thing with this guy. I was like, what you're doing is faulty inductive logic, because your inductive logic is Bill Simmons uses a moving average. Using a moving average is an analysis based on price. That means it's technical analysis. Ergo, technical analysis can be profitable, right? And I think that it's faulty logic, because you're taking like a minority and you're trying to apply it to the majority of everything, saying that this minority is indicative of everything else. Excuse me. I don't know what it came over me, but like I just got like a tickle in my throat and it like almost made me throw up. Vimit, let's see here. I missed an important question. What's your biggest tip for learning to anticipate future orders? Oh. Well, so there's a study called the inelastic markets hypothesis, or I forget the name of it, but I have a video about it, and they talk about a number of different things that could potentially predict future orders. So I would start there, but you know, if you can have a piece of information that is not correctly factored in by the market, and some reason why all of a sudden that's going to be a catalyst for orders to come in, then you have a good trade. I think right now the Treasury refunding announcement kind of biasing treasuries to the upside is like a really great thing that you could use to predict future orders. Did you scan yourself for aliens in your chest? I should, man. Good grief. Do you still scout from time to time? I remember you said you were looking for a bit longer trades, and if so, do you decide them as an order flow plus the informational inefficiencies? Yeah. So I've been a little bit more hands off lately because I had a pretty bad run, but I took a little scalp on Sim yesterday and scratched it. So kind of part of what I'm doing here is like decide a bias for the day, and I always want to be in line with that bias, but then if I identify a liquidity hole of sorts, these are the areas where the latent liquidity is low. Like there's less than 700 contracts, both bid and offer. Like if it ticks up, it's not very many contracts. And if I can find an area where it's trading in that like several ticks, then I might try and build a position out there saying, okay, my bias is this, so I want to buy. And if they get down here, I'll take some contracts and stuff. So that kind of works because if I take sequential profits, I'm able to make enough out of that range. If it runs, then it's a great trade. And if it doesn't run, then I can just scratch it at break even, assuming I've made enough in the range. So that's kind of part of how I've been playing it. Have you noticed how the number of participants in chat spiked since we mentioned OnlyFans? Well, the funny thing is that we started talking about OnlyFans, and people started asking real questions, right? But I think talking about technical analysis and the flaws in technical analysis and everything is, you know, if you're a beginning trader, that's going to be like really eye-opening to you, right? Because it really answers, I think, all of the big questions. Wow. ECB Lagarde is talking, and she said that Donald Trump winning the election could mean hard and difficult decisions for Europe. The Europeans are very concerned about if Donald Trump wins, it's for sure. Although I think that that's mostly because they think that he would like stop funding the Ukraine war. Which I think he would, maybe. I think that he would do things to try and force Europe to put more money into it. Going through new BS webinars now, trying to get used to scalping without the charts there and get rid of the trades. Yeah. So like, just think of it as like the market is very statistically efficient, but not very informationally efficient, right? So if you have some setup that is statistical in nature, it's like an intraday thing, and you're just using like what's kind of going on, and you're not incorporating any kind of larger analysis outside of the market, then whatever you're finding is likely to get arbitraged away. I think what happened with no BS day trading is because he started at an arcade is basically what we call them, because back then getting the internet and the computers and everything to trade was a hard thing. So you would pay a monthly fee for a seat at a place, and then you could trade your own money that way, right? And then they could potentially fund you with money and stuff like that. And that's where he learned all of this stuff. Well, back then there weren't robots so much, and so that was the game that they played. So he's teaching you like a real thing, and like what really happens in order flow and everything is just that, like, if you look at those setups in and of themselves, right, and you trade those, are they profitable setups? Not really, but he says that in the book. Because he says, well, here's this one setup and here's this other setup, but you may have noticed that the two setups are the same and they're just different outcomes, right? You'll see a certain thing on the DOM, and sometimes it resolves this way and sometimes it resolves this way. So how do you predict which one it's going to be? Well, you'll know it. You'll just know it, right? Is what he says. That's because he, doesn't have the kind of technical scientific framework to come in and say, well, you're trying to predict future orders and you're using all of this other information that you have to potentially predict future orders and understand which way it's actually going, right? Which trick they're playing on you, because you know which direction the meta order is actually going. You know that it's a buy right now, whatever the deal is, right? When you take a trade in ZN, how do you use a set take profit? I don't. So if I take a trade in ZN, I'm looking for generally looking for a trend, and when I start to see a liquidity hole, I get out. If it's a really strong trend, I might, let the liquidity hole form and then see them rise above it and then kind of watch it from there. But I do a pretty good job of detecting when it's going to kind of sputter out, or at least have a temporary pullback, right? So those liquidity holes, once you understand what they are and you watch ZN, you'll see them. They're quite obvious. The behavior is really strong in the treasury. So when you start to see a liquidity hole form, that's usually where I get out. Unless I'm really swinging for it. So that's how I do it. And more broadly, from my back testing, I have found that having a set profit target and stop essentially will make your results random. Like the effect that the set profit and target have on your strategy is so extreme that all of the stats and stuff that you're coming off are mostly about your profit and target. So, for instance, if you come in here and you say, I'm going to have equal risk reward, so I'm going to have a 4-tick profit and a 4-tick stop, I almost guarantee you that the win rate of that will be between 45 and 55%. To find something that was to be like 60 or 70% would be like crazy. And that's because, like, what if I got a signal and I got in And then news came in that had absolutely nothing to do with my signal, and then it pushed me up to that thing. And that would be like, okay, I made 4 ticks, but that move went like 16 ticks, right? Because my stop and my target are just so small that like any tiny little sneeze will cause me to hit my profit, my targets. And so what you're getting is essentially becomes random because you're subject to like every tiny little fluctuation, right? So like if I'm doing a back test and I'm really trying to see how effective or predictive a signal is, a better way of testing it would be a time-based target. So you'd say, I'm going to get in, and then I'm going to stay in the position for 30 minutes and see what I get, right? Now all of a sudden you have a distribution and you can see how effective is it at actually predicting like a real move is going to come, right? That gives you a lot more information for you to judge the effectiveness of your signal, right? So now that you kind of have that framework, now you can kind of see that it's like, okay, the bigger my stop and targets are, the more money I'm going to make, generally speaking. And that I kind of want like an asymmetrical thing. So like having something that's like, I have a signal to get in and I have a signal to get out, you're much more likely to get like good, favorable statistics out of that. And it also introduces fantails, so there's positives and negatives to that, but I think that's something important to understand. I'd argue take profit is the most difficult thing to correctly do on a consistent basis, much more than a stop loss for an entry here. But I mean, it's kind of messed up because like the thing is like in the short term, the easiest way to make money is to just do stupid stuff, right? This is really going there now if they broke that high. But I've pretty much been saying this whole time, probably go long, right? I want to wait for the JOLTS number. I didn't want to get into a move because even though I thought it was going to go up, I didn't know if it was going to do it before the JOLTS. So that says, well, I was wrong. I could have made a few ticks. But we still have JOLTS. Anyways, I think I was making a point about technical analysis, and then all the questions came up, and I kind of forgot where I was at. I guess my point was kind of like, I think that the definition of technical analysis offered by most people isn't very good. I think that if our goal was to optimize learning and like using language that would be the most useful for retail traders to find an edge, that we would want to use a different definition for technical analysis, like using past data, past price data to try and predict future price data on an individual asset, right? But ultimately, it doesn't really matter because we don't necessarily care about like technical analysis because most technical analysis trades fail. Most technical analysis strategies are unprofitable. What we really care about is a strategy that's profitable. Well, momentum is a strategy that we know is profitable. So just learn about momentum, and who cares what technical analysis is, right? That was the point that I was trying to make. I'm sure that a lot of technical analysis people will not agree with that, though. In fact, I bet you that this guy probably... There's this one guy who was like, oh, well, but I've been profitable with technical analysis. And I'm like, have you been trading over for 5 years? And he was like, no. And I'm like, okay, so then you don't actually know, right? Does anybody know what the reason for that pop was? I don't know if there was any actual catalyst. I think that there is probably some broader pressure because of the Treasury refunding today. And maybe there are some people trying to front run the JOLTS number too, but we'll see. Got to be careful. JOLTS has been moving the market a lot lately. Yeah, maybe a pre-market shuffle. I don't know. I mean, it jumped from like what 23.5 like up there. It was to a new high. Like it was 4 ticks away from a new high, and then it just jumped up there all of a sudden. It was a little weird. It definitely had a move that you would think was news driven. But the only thing that I see on my Squawk or my Twitter or anything is that there was like Canadian home builder sentiment and stuff, and ECB's Laguardia has been speaking in the past 10 minutes. That's about it. Maybe Laguardia said something that was dovish for the ECB. Are we seeing, but I'm not really seeing 6E moves, so I don't think that it was that. The whole rates complex is on the bull run, though, so there's definitely a trend, man. Yeah, so this guy was saying, well, but I know technical analysis works because I've been having success with it. I'm like, do you have 5 years? And it's like, well, I've only been trading for a year. Oh. He thinks that he's back tested it over years of data. Well, I'd have to see. I have to look at that data, but you use your face and your name on YouTube channel, but you haven't proven your profitability either. Yes, because I use empirical data for my arguments, right? It's so funny to have these conversations with people because it's just the same thing over and over again. It's just the same fallacies over and over again. You say there's a meta order in the dollar. Well, the dollar did just kind of jump there in the last minute. Although that's kind of a little bit odd because that kind of seems to contradict all of the other flows that we've been seeing in the treasuries, doesn't it? Because what we would probably want to see here in this situation for the treasuries to continue to go up is for the dollar to continue to weaken. I never argue with people online. Oh, I probably shouldn't. I let this one go in too many. One of the things I've learned on Reddit is that, like, if you're more than like 3 levels deep, it's only the person responding to you that's probably reading it. So I basically go to the point where it's like, okay, this person is too arrogant to be helped. Right? How should we play this news release? Well, I don't have any information that tells me what the number is going to be. But after we get the number, there might be things about the number that might kind of give us a little bit of a help, right? So I think one thing is, I think the number could be weaker than anticipated. That's kind of what the trend has been. So if it's weaker than anticipated, I think you could probably see a further jump. And because, well, I guess I should, let's put something where my mouth is, and I'll just take a sim trade. I think that the most likely outcome here is that you get a further pop. And since the trend is up anyways, right. Now, if it is more, if it's stronger than anticipated, that might cause like a short-term like pushback, but then I think that probably the uptrend continues. Unless it like really, really kills this. Like if we end up like below 111.16, for instance, then maybe that could be something that could, is really spoiling the party and causes a lot of people to stop out and stuff. Right? I would place the limit order way lower. Well, I'm just using the prices that are available to me now. If it comes back, I might do that. You have a sim at 05. I'm getting helped by there being like massive icebergs on both sides of this, so. That might be too far away. Yeah, we'll see. Interesting. The squawk is going to start with consumer confidence. Not JOLTS, but okay. The expected number for JOLTS is 8.75. Wow, how many times is it going to let me do that? I should cancel that one. We've got 30 seconds now. I do think that this one probably will be a little whippy, so. Here we go. Okay. Higher than expected at 9. So that was pretty bad. They're seeing some support at the open. So, this is kind of an interesting exercise here, though. So I was wrong about that one. I could just take the loss, and that's probably like the best thing to do. But let's just, for the sake of argument, say that now we need to sell it, and what is the best way to do that? Because it could come back up to this 25, right? So I could try and scratch it. So I'll put that in there to see, you know, in case we get lucky and we scratch it. I'm really concerned if we get below 116, though. I don't know if that being 9 instead of 8.75 is a huge deal. Consumer confidence was pretty, well, 114.8 versus 114.45, so a little better than expected. So let's see if they get the nope. Oop, it's coming right to me. Wow. That was pretty fast and aggressive. So now we have a little bit more going on here, right? Now we can say, okay, there has been larger uptrend because of the Treasury refunding announcement, but because the JOLTS job openings was so much better than expected, that the market seems to be reacting very adversely to that. So that does seem to have been enough to spoil the cardi. So, you know, this scenario that I thought, oh, it was going to break and it probably might do that and then come back up to this and maybe I can get this break even. I think that's a lot less likely to happen now, right? I think that it's probably going to hit that stop. It'd be funny if it like just barely misses it and goes back up though. So now the other thing is, how much in volume was it? 95 to 85, maybe 10K net, and then 5K back. So that's not actually huge. So it did go further in price than I anticipated, but not further in amount of volume than I anticipated. So we may still actually see some continued uptrend. It's also surprising because we did, again, we saw some like pretty aggressive buying up there, right? So you know that there are some guys that are long that are underwater now. But I think that those guys were probably taking like a longer term signal and everything. So I don't know if they actually care. Hence why you're not really seeing them puke. Oof. Here it comes. Wonder if that was one that I could have tried taking on a continuation short. I mean, it would have been really hard to have caught, but I think there probably was time, at least in the treasuries, to have like sold it at the open or something like that. I think it was unusual for Seth to be in these kinds of... Well, it's not been unusual for me to lately to say, let's just put something in for the news just to say, well, I thought that this is what's gonna happen, so let's see how it plays out. You notice though that it tends to be like way more complicated than that, right? Like even when I'm right, I can lose off of it and stuff. Because there's all of these structural flow things that make it really difficult. Okay, so I'm not going to wait for the stop to hit. I'm just going to kill it there. I think I want to be short. How do I do that? Well, there's something going on there at 15. Never bet against the US? I wasn't betting against the US. I mean, we would rather have lower interest rates, right? If anything, this is what happened is betting against the US, right? Okay. Well, it's still pretty illiquid around here, so there does, like, if I had been short, I probably would be taking off some contracts there, right? You think there won't be lower interest rates and expanding job market if you think the USA can't do both at the same time? Then you're no. I think that is kind of silly. I think that if you got a really strong jobs market, that it would be very difficult for interest rates to fall. That's not betting against the USA. That's kind of like the rosy scenario, actually. The rosy scenario is they cut interest rates maybe once or twice, and then they stay where they are, and the economy continues to expand. So one of the arguments against Taylor Swift being a psyop is that she's already the Time Person of the Year and everything. So do you really think that she would need to fake a relationship? Well, except for that, the relationship started before all of that stuff happened, so... The problem with what you're saying, Jiwi, is that the way that you would play that is to just stay long index funds. Right? Like, what happens with individual assets and how they react to individual news and everything else like that is like way more complicated. And what is objectively good or bad for the United States isn't so clear cut. Right. And there's this kind of other thing, which is like, I think the place that whole idea kind of come from is buy the dip, right? That there's a Fed put and buy the dip. But that's kind of the other thing that they're telling us is that the Fed put is kind of over. I've been testing my strategy and where I just go for 4 ticks. So when I get my signal, it sometimes goes for more, but I personally need the structure of a rigid take profit. Well, so there's kind of 2 issues with what you just said. Sorry, but the first thing is that if you have a really close take profit, just realize that really colors your results and makes your results mostly random. Okay. The second thing though is that you cannot rely on testing this stuff by hand. The number of samples that you need to verify something is just way too high. It's way too high. And the smaller your target is, the harder it is to get an accurate back test too. So your idea is I'm going to trade this and I'm just going to keep really good stats, and then in a month or 2 I can really see if it's working or not. That's not going to work. You're not going to have enough data. Well, the pullback so far hasn't been very good. I'm still hesitant. It still looks a little illiquid, so I'm still hesitant to get involved. At least with my live account. The news are already too op for Psy. Oh yeah, where are we at now? With the 21 votes, 52% of you say yes. This is actually a lot closer than I thought. I didn't know how it would come out, but I kind of suspected that you guys would like all be one direction, and that wasn't the case. So I guess that's good and bad. I don't know. I don't really think it's a psyop, but I do think it's funny. I'll leave the poll open until the end of the stream though. So I'm gonna respond to this person. That's still TA is used to find this and not FA. Oh wow, they went for another new low there just then, huh? S&P 500 being unhappy here. I don't know about this one, guys. I'm really not sure. I mean, so this news has definitely shifted the trend around and everything, but the question is how far will it actually go? And I really have no clue, because I think that Treasury refunding announcement yesterday was like a really big deal. Now, JOLTS, as of late, has been a really big deal too, but I don't think it's as big of a deal as the refunding announcement. And the other thing is that I'm not actually really seeing the market volume come in on these moves in the Treasuries. So I'm not really seeing order flow confirm any of this. So I don't think that I really have a trade here. Fortunately. Like it is going down, but I don't think that I have a really strong I think that I have a strong theory for why you might see a meta order short, but I don't have really strong evidence to confirm that it's happening. So I probably would want to be just hands off for a little longer. So I don't take a trade, yeah. I mean, if I was in a risk-taking mood, I could be short anywhere around here, but I definitely already missed like probably one of the better opportunities you're going to get there, right? That might have, for all we know, that was it. We have damaged liquidity above 22. When it fills in, who knows? In ZB? Oh, the easy trade is over. Yeah. I think that last little move down though kind of suggests that the selling is aggressive to in some form. It wasn't in the treasury. It must have been in the dollar or in the Japanese yen. The dollar did move higher there when we pushed to new lows. Yeah, and dollar volatility is like one of the things that can like really kill us because it's very difficult for us to predict those short-term flows in the dollar. The delta for the pit is positive. Oh, well, yeah. Like if we go all the way back to the beginning of the overnight session, I guess that's true. Man, look at that. It's just like plunging down there. Now that one had volume with it. Let's see if we get anything about they revise consumer sentiment. GM shares soar as higher profits forecasted for 2024. Senior Hamas leader, the third stage is releasing the bodies. Okay. That's awful. Oh, he was saying a bunch of stuff. The first stage is releasing civilians, as in women, children, adults, patients. Senior Hamas leader, the second stage is release all male and female recruits. Third stage is releasing bodies. What is happening? Oh, senior Hamas leader tells Reuters first. No, let me come back. Where is it? Where do we start here? They're proposing a ceasefire. Senior Hamas leader Paris ceasefire proposal includes 3 stages. Okay. And what does Israel have to do in response, though? Think that they can recover 16 again now after that? The move might be over after that. That kind of had a little bit of a crescendo feel to it, but I'm a little skeptical on their ability to crawl much of that back. I don't know. This is a very interesting situation. But I did say, you know, below 16, that must mean it's damaging enough that... Just how far below 16 can they get? I don't know. You know, I feel lost a lot in this market, but I kind of feel like that maybe my lack of action in this situation has more to do with just like overall confidence and stuff. Well, right now my big focus is on the test that I'm taking tomorrow. And I don't want to like be getting into all sorts of trades and like all of the psychological factors involved with that before that. So it's probably better that I stay out. No hero trade. Yeah, I don't think. You know, I thought that maybe there could be a hero trade in this, but once we lost 16, that kind of killed that plan, right? Ow. There is some real volume coming in now in ZN, though. That makes me wonder where this is going this week. Like, if the jobs numbers continue to be so positive, will the market really shift their expectations that much? You know, the other thought is that the 10-year yield above 4.1 is still just kind of like where it was a few days ago, right? Oh, you know what? I forgot this thing about like what exactly is wrong with being long SP ATFs. Nothing. It's just kind of a boring trade. It's just kind of like, if that's what you think and that's the way that you want to trade, then why do anything? Why not just be long equities? Your theory for what moves the market basically creates a market where there's no reason to do anything. Nobody's in dividend ETFs? I'm not in dividend ones. The thing is, dividends aren't that great these days. There are so like the thing right now is that like the companies that have really good dividends have like other problems with them. Companies make more from buying back shares. This is interesting. U.S. consumer confidence soared higher in January, according to the Conference Board, with the headline up from 108 to 114.8. This was driven by a huge surge in present situation. That is the highest present situation index since the start of COVID lockdowns. But for the third straight month, the Conference Board revised its consumer confidence data significantly lower. Which brings up the same question we had last month. How do you revise consumer confidence down? Do you ask them again and they tell you, you know what, I wasn't feeling it as much as I thought I was? Right? This is a question for the economists, yeah? some of our economist friends on TikTok, they might know the answer. How do you revise consumer confidence? Conference board's indicator inflation expectations tumbled further to 5.2%, still notably high, but trend in the right direction. So we ask again, is Bidenomics all driven by seasonal adjustments and historical revisions? I think even after all of the revisions and everything, that there are some pretty positive things. Just months after massive labor deal, UPS announces massive layoffs. Yeah, oof, that's gonna hurt. Still not seeing anything about the JOLTS though. $12,000 jobs, or 14% of its 85,000 management jobs would be cut. Oh. So they're paying the delivery people more and having less management people. Well, I guess that's good in the long run. Should I really make this point to this person? I don't care. I need to stop posting on Reddit. I need to stop answering comments to people on Reddit. They're just too freaking stupid to... Like, it's way better to have a conversation with people that have, like, watched the channel and have, like, a certain set of knowledge to go from. You know, so that you don't have to go into these same stupid arguments with people. Right? Avoid the main minefields that kind of prevent retail traders from ever being productive. And well, I don't know about a dividend ETF. Well, what I'm trying to say is that it used to be that you'd offer dividend because that was the only way to return capital back to investors. Over the past few decades, companies have learned that it is a lot better for you to just buy back shares, that you return capital to the investors better by buying back shares. So when you have a company that is offering a really juicy dividend, then it's like, why? Why not buy back shares? Is it because you don't really feel confident in your midterm stock price? Right? So you there's kind of a fundamental problem. And when you look at the companies that have the big dividends, like AT&T, for instance, you know, they're usually companies that have really big problems and are very much on the downtrend, right? Can you explain why NAS and ES have been... Oh, I think what were you meaning by NAS? Well, so I think that for the most part, though, the S&P 500 has been pretty range bound, actually. It was just yesterday when the Treasury refunding announcement came out, and it was much lower than anticipated, that, you know, we had that huge rally. So the rally was that because of the number that the Treasury Department put out, which, by the way, I wouldn't put it past them for that to like change next quarter or whatever the deal is, right? Or next year. But But because of that, they said, oh, well, that's lower interest rates. That's good for the markets, right? Now what's happening is that's kind of being put into question again, because it's like, well, if JOLTS is back up to 9 million, if the jobs opening is back to 9 million, there's still like this pressure in the labor market. It could make it very difficult to cut interest rates. Okay, Biden has decided how to respond to the death of U.S. troops in Jordan. Makes sense, yeah. I'd say that this market so far has been like the play-by-play. The major points at least have made sense. The news last week, I think the way that the markets reacted to that was all like a bunch of nonsense and made no sense to me at all. But like the major plays, they all kind of make sense. It's just that they're not really very predictable right now. So market has never been so choppy. Well, get used to it, man. You will merely have to adopt the range. But I was born into it, molded by it. I didn't see a trend until I had been trading like 2 years. So when they start selling volatility, man, it sucks. Nobody wants to day trade when that starts happening. Okay, I'm just telling you, like, because there should be some things about like providing liquidity and so forth that should be advantageous to you when volatility goes down. But because we don't get a very good place in the queue, that kind of leaves us out. And so the lower volatility gets, generally speaking, in my experience, and this is just anecdotal, the less popular day trading is. And in 2017, when I started doing this, nobody wanted to day trade. And we may be going back to that. We may be going into a long period where nobody wants to day trade. At least not ES. But I'm trying to paint. I don't want to. I feel like that if I just like outright say things, that it doesn't have the same impact for you guys, right? But I'm trying to paint this larger picture, right? Trying to paint this larger picture that because of the situation with having a huge fiscal deficit, but also inflation being a concern, kind of makes stocks kind of suck. There's a lot of negative things about stocks for that. And as a result, at least according to Bloomberg, according to Simon White from Bloomberg, that can mean better opportunities for us in the commodities trading markets. That's why I want to get Series 3, register as a commodities trading advisor, and keep myself open for that possibility to make money from people wanting to get more involved in the commodities market as a result. And it's been something we've been waiting on. Like, we kind of thought that it would happen, then it kind of died down, and now that possibility is coming back. We want to be ready for it. I think I should make a video about studying for it, because I want to encourage you guys to go and get Series 3. I think that a lot of you that have been day trading futures for a long time, you know a lot about futures, and you know that's a space that you could probably have more success in, just, you know, kind of taking a more professional route and not having to make the money from day trading, but still make money from trading and being involved in the futures market, right? And the test so far hasn't been too hard. I think I still need to trade. I was taking tests yesterday, and it was like all the questions that I was missing, and like they were almost all about the basis, and I had to get all of my I tell you what, like kind of getting all your directions and everything right is kind of hard to say. Okay, so if you are a producer, then you are long the basis. So that means that you own the commodity and you sell the futures to hedge. So if you're long the basis, then that means that if the basis strengthens, you make money, and if the basis weakens, you lose money. And then vice versa, if you are a buyer, you are short the basis, you hedge by buying the futures, then you make money when the basis weakens. And I had to sort all that out because they'll do all of these tricky things where they're like, they make the way that they ask the question about like which particular thing are they piece of information are they looking for that will change whether or not, you know, the basis is adding to or taking away from what it's looking for, right? Like, well, the basis, you know, having a profitable basis trade, that adds to like your net profit on the trade, but it reduces like the price that you paid for it and things like that, right? So it's so confusing. I'm in test mode now, and it's hard to think about a whole lot else. But I've been passing the test, so I feel pretty confident going in. I want to crunch as much as possible, but I feel pretty confident going into the test. So I'll be pretty embarrassed if I fail it. I'll feel pretty embarrassed. CNN says boomers won't move out of their big homes because their houses have appreciated so much that they'd have to pay capital gains taxes despite being exempt from taxes on the first $500,000 of gain. Jeez. Well, that is like, you know, something I've never really thought about. So if my house is coming up on $500,000 worth of profit, does it make sense for me to sell it and switch into a new house before it goes further than that? Is it better to sell your house than pay capital gains tax? You can sell your primary residence and avoid paying capital gains taxes on the first $250,000 of your profits if you're filing single, and up to $500,000 if married and filing jointly. The exemption is only available once every 2 years, but it can in effect render the capital gains tax moot. Let's see here. Short-term capital gains are taxed as ordinary income. Long-term capital gains are 0, 15, 20, or 28 for small business and collectibles, with rates applied according to income and tax filing status. So 15, if you're making less, it's less than 500,000, then it's 15%. So let's say that you bought a $500,000 home. Let's say that your home was worth $500K. And the home is now worth $1,500,000. Right. That means that, or should we say, yeah, so 1 million would be the max that you would pay without having to pay capital gains tax, right? But then you have an extra 500K of profit. That is taxable. Right. Which means we apply a 15% tax rate on that. $75,000. So it would be the price of your home minus 500,000 times 0.15 equals the tax. But what would we be taking this against to optimize? The additional cost for you moving and everything else like that? Change in interest rates probably factors in too. That's a tough one. I guess I'm asking, at what point would it make sense for a boomer to switch to a new home to avoid having to pay the capital gains tax? Right. Maybe you're already to that point and because you screwed up, right? But they're right back at the, oh, in fact, a new low there by 1 tick. Jeez. So the best of the pullback that you got was 14, like 10 ticks. Eek. 10 ticks over here in the micros. That's mighty bearish. I don't know if it says anything about what will happen the rest of this week, but it's mighty bearish. You come over here and you look at it. Well, there was support yesterday at 10. That's only like 3 ticks away. So we can see what they do there. They get below 10, then it really starts turning like a, whoa, okay. It also looks like the spread is flattening, isn't it? Yes. So the yield curve is reinverting. It is kind of funny to look at the 2-year and see it at 4.36 and the 10-year at 4.1, right? So it wasn't, I don't think that the 2 and 10 like uninverted, but it's like getting more inverted again. JP Morgan says current S&P 500 rally is far more similar to .com bubble than people think. Eek. Still pushing hard. Well, it's about time for us to get going, but I would really want to know how far this goes. We'll be monitoring it today. Because I tell you what, it's like as soon as I start to think that it's like, okay, well, maybe we're going to start trending up because of this Treasury refunding announcement. And then this piece of news comes in and makes me question all of that. And then I bet you tomorrow that we get the ADP news and then that will make me question all of that too, you know? Like, it's just like, man. I just feel all over the place. You question too much? Well, I think that we're probably reading a lot into a lot of different things. And no, I didn't realize that I was setting my test up for Federal Reserve Day. But I guess I won't be well, I could stream it, but I don't think I will. I think I'll just sit and watch it and study. I'm only just now realizing this. I set my test up on the Federal Reserve Day. Dang. See? My poor planning. We still got nothing about the job. Oh, okay, here we go. After declines in job openings accelerated in the later months of 2023, prompting economists to pat themselves on the back for predicting a soft landing and validating their expectations for Fed rate cuts. Moments ago, the BLS came out and spoiled the big picture when, instead of doing the market's bidding, it confirmed that it responds first and foremost to the Biden administration's political demands. It reported that in December, job openings unexpectedly rose, raising the specter of a hard landing. According to Biden's Labor Department, in December, the number of job openings unexpectedly rose 101K in December to 9.026 million from an upward revised 8.925 million, meaning that the November print was not the lowest in 3 years as reported last month, but was actually an improvement from October. Boy. According to the BLS, in November, job openings increased in professional and business services, but decreased in wholesale trade. The modest increase in the number of job openings meant that in December, the number of job openings was 2.758 million more than the number of unemployed workers, which the BLS reported was up 6.268 million modestly from last month's 2.662 million. Said otherwise, in December, the number of job openings to unemployed rose to 1.44, a sharp rebound from the November pre-revision print of 1.34, which was the lowest level since August of 2021 and almost back to pre-COVID levels of 1.3. And then everything was revised. But what was more interesting than the increase in the number of job openings in December, which we are certain will be revised lower next month, as has been the case with everything under the Biden administration, was the number of quits. Here we find the number of people quitting their jobs, an indicator traditionally closely associated with labor market strength, as it shows workers are confident they can find a better wage elsewhere, tumbled by 132,000 to 3.392 million, which is below the 3.4 level reported in 2020, just before the COVID shutdown. They're saying it shows labor market strength. The number of quits decreased mostly in healthcare and social assistance, and in transportation, warehousing, and utilities. The number of quits increased in wholesale trade. And just in case some still believe that in Biden economics strong jobs lie, the number of hires has also been falling, even though it managed a modest rebound in December, rising by 67K to 5.621 million, also well below the pre-COVID levels. They make their analysis here so biased. I hate it. Finally, no matter what the data shows, let's not forget that it is all just estimated, and it is safe to say that the real number of job openings remains still far lower, since half of it, or some 70% to be specific, is guesswork. As the BLS itself admits, while the response rate to most of its various labor surveys has collapsed in recent years, nothing is as bad as the JOLTS report, where the actual response rate has tumbled to a record 32%. In other words, more than 2/3 or 70% of the final number of job openings is estimated, and at a time when it is critical for Biden to still maintain the illusion that at least the labor market remains strong, when everything else in Biden's economy is crashing and burning, we'll let readers decide if the administration's labor department is plugging the estimate gap with numbers that are stronger or weaker. As for the Fed, now that the strength of the labor market once again takes precedence for Biden's handlers, Powell is in trouble. How will he justify an even more dovish pivot than the one which sparked the biggest bear market rally in history in December, when the labor market just refuses to crack? When government wages hit record highs every single month, and when supercore inflation has now bottomed and is once again rising, not to mention home prices just hit a new all-time high. Then it is an election year, and we are confident that Powell will figure out a way for the no longer independent Fed to do just what the White House demands. Doesn't work that way, but okay. I would be, if Powell comes out and is like and the market like interprets it dovishly on Wednesday, I'm gonna be like, okay, I'm so through with this. Like, it just seems so silly to me. Let him get another term in office and see if it changes. Bet you it won't. But my own theory is that there are things structured about the economy that are kind of causing the numbers to come out like this, and that it's not necessarily that they're trying to fudge the numbers. And the question is, what are the dynamics in the economy that are kind of causing all of these numbers to get revised so heavily in one direction now? Because to prove that they're fudging the numbers, we'd need actual proof from them, like a whistleblower or something like that. You question too much? No. I take the test on Wednesday. Last time I tried to not say a whole lot about it, and then I passed it, and you guys are like, "Oh, what about the test?" And I was like, "Oh yeah, I did pass it. Pretty cool, right?" So I've already said too much about it. Do you think that the market is front running the interest rate? I don't think so. I think that what you're seeing right now is just about JOLTS. The market seems to overreact to JOLTS as of late. They seem to really care about what it says. But like, my recollection was that last time, I've seen a couple of times where like you got like a buy off of JOLTS and then a sell off of the non-farms and vice versa. So I don't think that really tells us what the end story is. But I think that when we come back on Monday, that our view of the world will probably be very different, or we're going to have a lot more information at that point. You've noticed the technical setup in treasuries. Is it back testable? Are you asking me if I'll back test it? Because I'll back test it. If it's not back testable, though, I'm probably not interested. Also, you got to be quick because I got to go. JOLTS spoils rally. We'll end the poll. 52% of viewers out of 23 viewers believe Taylor Swift is a psyop. Okay. Well, I hope that if Miss Swift ever sees this, that she realizes we're just joking around. No, I don't know. I don't know you. It is kind of a funny, interesting cultural phenomenon that a lot of people think that it's a psyop. I'm gonna wait to see if Jiwi's gonna tell us our technical setup. You know what? You can just send it to me on Discord. You don't have to. Oh wait, here it is. If the market is in a downtrend, and each successive lower high is only one tick lower, and all are one tick lower, the market will reverse all the way back up to the high of the day. Oh, okay. I know what you're talking about. Yeah. I think I've actually tested this before even too. So you're saying it's a downtrend and it comes back, and each time that it goes to a low, it's only by one tick, right? Then it will reverse all the way back up. But how many of those do you need? Do you need it to like happen 3 times in a row or something like that? Or rather 2 times in a row? Because in this instance, it only made a new low by one tick once. So is that going to reverse it all the way to the highs? I don't know. He says yes. You have to message me, be a little bit more specific, but we can test that, yeah. Kind of, we can test that. You kind of have to say, okay. When we get a pivot up here, right? Then we come in and we say, was this one tick lower than this? Was this one tick lower than this? Oh, you can't even see where I'm talking. If we get like this, and then it goes one tick lower, and then it comes up like this, okay? And then this one is higher. Essentially. At this, once this point is confirmed, we can look back at these points and we can say, is the difference one tick? And then take it. So it probably is back testable. But my mentor had this thing where John, that was his favorite trade, is it would do that. It would make a new low by only a little bit. And then the next one, it was a little bit higher, and he would always buy that one. That was like his favorite trade. I kind of think, though, that because like when I say I know what you're talking about, it's done that a lot recently, right? But that's not the usual behavior for the Treasury. The usual behavior for the Treasury is, no, not doing anything. Here's the news, gadoosh, and then it just kind of flattens out the rest of the day. That's the most common pattern you see in the Treasury. So, especially past few years, that or you just get this. Goes sideways. Hate those. But we'll have to learn to trade those. Okay. I'll see you tomorrow, at least for the morning. In the meantime, stay excellent, team.